It's Thursday, October 23rd, 2025. Welcome to your news update on Blit Brief. Small, but almost everything updated every weekday. So welcome back. It looks like the post-Diwali market is really ticking off with some energy, seeing some strong positive signals this morning.
Definitely. That festive cheer seems to have carried right over into investor sentiment. You saw the gift nifty,
Yeah, it jumped quite a bit, didn't it?
over 1%. And a lot of that seems tied to, well, reports suggesting those India-U.S. trade talks are going surprisingly well.
Ah, okay. So a bit of geopolitical optimism boosting things makes sense. The main indices, though, Sensex and Nifty 50, they finished up, but only just. About, what, 0.1%?
That's right, marginally higher. But like you said, the real story wasn't necessarily in the headline numbers. It was more in those high-growth areas.
I'm right, you mean like the SME IPOs?
Exactly. The BSE SME IPO index shot up by 1.2%, and the Nifty IPO index, that was up 1.1% too.
When those lead the way, it really tells you something about risk appetite, doesn't it?
It absolutely does. Suggests investors are willing to bet on newer, perhaps unproven opportunities, chasing that potential growth.
And looking at individual stocks, Ciplas seem to be doing well.
Yes, Cipla led the gainers, up about 1.5%. Bajaj Finserv also had a good day, gaining around 1.4%.
But not everyone was celebrating. Kotak Mahindra Bank took a bit of a hit.
Yeah, Kotak was down about 0.8%, and HCL Tech slipped to around 0.6%.
Okay, but sticking with banking for a second, there was that bullish call from Jefferies, wasn't there?
Oh, absolutely. That was significant. They raised targets for 10 banks, including heavyweights like HDFC and Bandon Bank.
And these weren't small adjustments, right? We're talking potential upsides of...
Up to 34% for some of them. It's a really strong signal of confidence from the global analyst community in, the Indian financial sector's underlying strength.
It does raise the question, though, is it just catching up, or is it really seeing past the sort of global macro jitters?
That's the million-dollar question, isn't it? The market certainly seems to be betting on that structural growth story winning out, at least for now.
Right.
Okay, let's pivot to Infosys. That huge share buyback. What was the key takeaway there?
Well, the really interesting part, the twist, if you like, was the promoters deciding to sit it out. Nandan Nilekani, Sudhamardi. They opted out completely.
And the effect of that is?
Two things, really. First, their own stake actually edges up slightly, expected to hit about 13.37% because they aren't selling into the buyback.
Okay.
And second, it signals pretty strongly their commitment to returning capital, but letting other shareholders, institutions, and retail benefit more directly from this round. Shows confidence in cash flow.
Got it. Meanwhile, the auto sector seems to be, well, roaring. Tata Motors had some big festive numbers.
Huge numbers. They delivered over 1 lakh vehicles just in that Navratri to Diwali period.
Wow. And year on year.
Up a massive 33%, really driven by SUVs and growing demand for their EVs. It definitely suggests consumer discretionary spending is back in force.
Which makes the situation in the IT sector even more interesting, right? This divergence between foreign and domestic investors. Exactly. It's like a philosophical battle playing out. FIIs, the foreign investors, they're looking at potential global slowdowns impacting IT spend.
And they're selling.
They are. They cut stakes in 8 of the top 10 IT stocks last quarter, selling the macro fear, essentially.
But the domestic mutual funds.
They're doing the opposite, making what some analysts are calling bold contra bets, buying into 9 out of those same 10 stocks.
So short-term global fear versus long-term domestic confidence.
Precisely. FIIs thinking next few quarters, MFs thinking next few years, and you see it in stocks like Tech Mahindra.
Right, down almost 10% recently, even with decent results.
Exactly. The quarterly numbers were better than expected, but that short-term global perspective from FIIs is still weighing heavily on the sector. The macro challenges are definitely lingering there.
Okay, let's use that macro uncertainty as a bridge. Geopolitics just threw a spanner in the works, didn't it? U.S. sanctions on Russian oil majors.
Yes, President Trump imposing sanctions on Rosneft and Lukoil. That's Russia's 2 biggest oil companies.
And the immediate impact on oil prices.
A surge, up to 3% almost instantly. Just pure supply-side concern kicking in.
Which has immediate implications for India, of course.
Absolutely. Indian state refiners are now having to double-check all their Russian contracts, making sure the supply isn't coming from these newly sanctioned entities. It adds a layer of complexity.
And then there's Trump's claim about India promising cuts.
Right, claiming India pledged to cut Russian oil imports by almost 40%. Whether that's confirmed or just political posturing, it creates pressure and uncertainty in the energy markets.
Meanwhile, on the U.S.-China front, Trump's meeting Xi Jinping?
Yes, in South Korea. Supposedly discussing trade, soybeans, nuclear arms, the usual agenda.
But at the same time, the U.S. is looking at new export curbs against China.
Correct. Plans to restrict exports of software-powered goods, things like laptops, even up to jet engines. Seems like direct retaliation for China's rare earth restrictions.
So weaponizing tech supply chains now.
It certainly looks that way. A complex economic and tech battle playing out on multiple fronts.
Okay, let's look at money markets. Gold seems to be cooling off.
Yeah, extended its losses after that really sharp drop, steepest single-day fall in, over 12 years?
Driven by the stronger dollar, I assume?
Mostly, yes.
Yeah.
Stronger dollar and everyone waiting on that key U.S. inflation data, the CPI figures.
So the dollar's up against major currencies while traders wait for clues on the Fed's next move.
Exactly. And all this is happening against the backdrop of, well, frankly, staggering U.S. debt levels.
Just crossed $38 trillion, didn't it?
It did. And the alarming part is how fast that last trillion was. Added the quickest accumulation outside of the pandemic shock, it definitely casts a long shadow over global financial stability.
Which brings us back home to India trying to secure its own critical supplies. Fertilizers, for instance, seeing a big import surge.
A massive surge. Total imports jumped 75% in the first half of the fiscal year, in urea specifically, up an incredible 138%.
That kind of dependency feels risky.
It is. And that's why you're seeing this strategic move, Indian companies planning the country's first urea manufacturing plant in Russia.
Ah, building capacity at the source.
Precisely. It's about ensuring a steady supply, hedging against that global price volatility we've seen so much of, a big strategic play for long-term security.
And related to stability, the RBI continues to add to its gold reserves.
Quietly, but consistently. The reserves just crossed 880 metric tons. They added another 0.2 tons just in the last week of September. It's part of that ongoing currency management diversifying reserves.
Okay, now, this GST situation with salons and gyms, prices went up after a tax cut. That seems wrong.
It does sound completely counterintuitive, doesn't it? Prices up 10%, maybe 20%,
Well,
right after a supposed GST rate cut.
So what happened? Why did removing the input tax credit cause that?
It's all about the ITC, the input tax credit. That's the mechanism where businesses claim back the tax they paid on their own inputs, rent, equipment, supplies, services, you name it.
Okay.
When the government cut the headline GST rate, they also simultaneously withdrew the ITC option for these businesses. So suddenly the cost of their operations went up because they couldn't reclaim those input taxes anymore.
Ah, so their operating costs effectively increased, even though the final tax rate looked lower.
Exactly. And to cover those higher operational costs, they had little choice but to raise prices for consumers, even with the lower GST rate. It's a classic case of unintended consequences in regulation hitting the end customer.
Fascinating. A real regulatory tangle there. Okay, finally, let's end on a positive note. A big innovation. This eye chip for the blind.
Yes, this is genuinely groundbreaking stuff coming out of Stanford Medicine, the Prima chip.
Prima, and it's actually restoring reading ability.
That's the claim, and early results are promising. It's a tiny wireless implant for people with advanced macular degeneration, a condition that really didn't have great solutions before.
How does it work? It sounds like science fiction.
It kind of is. Essentially, the chip works with special smart glasses and uses infrared light. It bypasses the damaged photoreceptor cells in the retina.
The light-sensing cells.
Right, and it translates the visual information directly into electrical signals the brain can actually interpret as vision, specifically enabling reading in these cases.
So it's replacing the biological function with technology?
In a way, yes. It's this incredible mix of optics, AI processing in the glasses, the microimplant itself, and advanced surgery. Really highlights the speed of innovation in medtech.
Amazing. A fantastic way to wrap up. And just before you go, a quick note. This deep dive commentary was put together using advanced AI. We always strive for accuracy, but please do cross-verify any crucial information yourself. Your informed decisions are what matter most.